What is up, guys? It's your boy, No Risk, No Premium, back with another episode of the Market Overview. Guys, today we had another day of pretty much going absolutely fucking nowhere. You gotta love it though. Building out some balance up here. Are we waiting for a nice base to build out for a break up? Are we waiting for a nice base to build up to break down? The truth of the matter is this: nobody really fucking knows. Okay, nobody knows for sure. But the only thing that we do know for sure is we can go check the economic data. You should be doing this every morning, guys, seeing what could possibly move the market. Tomorrow, we have a bunch of mortgage data coming out at 7 a.m. Eastern Standard Time. So 2.5 hours for the market open could give some good pre-market trading to anybody that's up that early. After that, 8:30 a.m. Eastern Standard Time, 1 hour before the market open, we have core retail sales minus autos. Those will be great data to see for the health of our economy right now, with rates being so high for so long, just to see what's going on in that aspect of things, but definitely should cause some movement there. So if you're going to be up early, you can definitely watch to see how we react there. And then into the market hours, you see we have three knuckleheads coming on. You guys know anyone besides Powell is a goddamn knucklehead. You shouldn't listen to them. Really doesn't matter. Whatever the hell they say does not matter. Only thing that matters is what Powell says, right? A little bit of data right there into a pre-market. Then we have some data 30 minutes after the open business inventory, NAHB housing market index. These will definitely give us some movement. Now, I don't believe they're going to make or break the market by any stretch of the imagination, but hey, a pop, a drop, a wick up, a wick down, a liquidity grab, more than likely could happen right there. So any small accounts peep 30-minute rule should be in effect. Let that data play out. Then we should get possibly a more clear idea or trend of where we're going to go for the day. First, we start off with ES here. As we can see, I'm long in any levels into 47.80 to 47.90. Okay, and looking to reject 48.20 to 48.30 and above. Now we could see, obviously, right, we are in what? We are in an uptrend here. Now, are we making a lower high and a lower low? Are we building out a bear flag? Is this a huge head and shoulder? I don't know. So whether we're charging up for a big move higher or a big move lower, I really don't know. I'm just going to play around my levels. Okay, if we hold with volume 47.80 to 47.90, I'm going to look to take the longs. The short trade I do think is set up for underneath 47.65 area. Underneath there, I do believe we got 47.40, 4,700 underneath that. I would long, I think I'd have a high probability long right here, about 4,700, even at the contract roll, 4,650. Watch those two high probability zones to long underneath. Now we got to get underneath 47.65. If we don't, I would looking for the long trade for the bounces in there, possible liquidity grabs, sweep of the lows, look for a move back to the upside. Now we are in an uptrend, so I favor buying the dip until we lose a major support. I would call 47.65 a pretty major support to lose. And if we lose it, look to get short underneath that level there. On to SPY is going to look pretty identical to the ES chart. Why? This is a cash ETF. ESF is the futures contract of the S&P 500. Okay, onto this chart here. I mean, really, same thing, right? We can see the same thing. I feel like there's one too many lines in here. 475. I'm just going to take this one out because you can see it's really the balance is building in between 473, 478, really. But you can see this balance is definitely building out. So I'm looking anywhere from about 472 to 473. If we hold dips into that zone, look to long that area. Likely under 470, we'd take a trip back to 468, 464. I would have a high probability long in this zone because this is the last power pump on the last FOMC. So I'd like to see maybe a sweep below this weekly lows and then a pop back up from there. But I'd be looking at 464.50 if we're going to get under 468. So shorts under 468. I like that zone in there. Nice high probability short setup there. I do think we probably liquidity grab underneath the lows of last week. To head lower, look for the longs at 464. But for tomorrow, if we hold 473, 472, 473, we're going to look at the long trend and look at calls to take us right back to 478, 480. I do think we get a double top 480 at some point. And maybe a liquidity grab to the upside. I don't know, but I'm looking long of 473. If 478 fails, you can look to take the short trade up there as well. On to QQQ. What's going on in tech land? As you can see, building out some balance, sideways trading action, not ideal, right? Not ideal if you like the diddle in the middle. Diddle in the middle, you get the fiddle. Nobody wants the fiddle, okay? You just want to buy at your high probability areas of interest and get in and get out of trades, okay? In the middle, you're shark meat, right? You're blood in the water. But if you trade and you're patient, trade around 411 and if trade around 406.50, even down to about 404, but really 406.50 to 411. Trade around that zone until one of those levels breaks. You play within that zone. So I'm looking at longs at 407. I'm looking at shorts at 411, breaking hold 411, 413, and all-time highs from there. Okay, all-time highs from there. You can look for the shorts here at 411 if we fail. IWM last, but definitely not least, small caps. Looks like we're breaking out of this balance zone, right? You see this old balance zone we had over here. We ripped up much higher, wouldn't fill the gap. Had some nice balance working out here, and now it looks like we are finally breaking down. Can see some volume, not huge, but I do favor a bounce to 188. I think tomorrow's gonna be all about 188 here, right? Revisit this old balance structure as the demand come down, bounce off this level. So for me, high confidence longs 188. I will be looking at that level unless we reclaim 193.50 ish area. If we gap up and reclaim that quickly, I do believe that this was just a liquidity grab, and now we're going to be right back into business to the upside. Guys, last but not least, if you're in us with the Disney trade, it is looking very nice. Right, this Disney trade, we had longs into this 88, 89 level, and look where we are now, 93, very nicely down to runners here. Free trade is on the book, so if you took it, congrats, guys. Other than that, that is all I got for you. As usual, you got to wake up early, get your levels right, and of course, not do anything fucking stupid. We'll see you bright and early. Peace.